Ladies and gentlemen, welcome back to the FinStep Asia FinTech Decoded podcast. This is Musheer Ahmed, and with me is my co-host Monica Jasuja.
Hello.
And with us is a, a very special guest who will be taking us through a conversation of evolution of AI in investment management and looking at how Pryon Capital looks and does investment using a very interesting AI model. So, Jay Shah, CEO of Pryon
Thank you.
Capital, welcome to the FinTech Decoder podcast.
Thanks, Musheer. Thanks, Monica, for having me on the podcast.
Jay, we've been speaking for a couple of weeks, and my old trading roots kick in here when we have this conversation, and it excites me a lot. But the more exciting part of that is the conversation around the evolution and the use of artificial intelligence that we see in investment management. And I always feel when this conversation comes up on AI, it's fascinating how a large focus in the recent past has been on Gen AI and copy trading and things like this. But AI has been in financial services for quite some time now, right? About 40, 50 years, if
Right.
not more. You've been in the industry with deep expertise, and you've also been looking at artificial intelligence for quite some time. Your thoughts on the evolution of use of AI broadly in the financial services before we dive into the use specifically in investment side of it?
Sure. It's a bit of a journey, but you're right. The use of, I guess, computer models has been around for 50 plus years, right? In the 70s and 80s, banks didn't really think anything. They didn't really call it AI or so, but they were mainly on statistics, using statistical models, calculating, probabilities and so forth, and making decisions based on that. And I think it was it 1973, the Black Scholes model came into play. Because before that, for example, option trading, people were kind of guessing, or it was a gut feel about a certain price that they wanted to place on the market. And then Black Scholes model came in, and it wasn't like Wall Street only not only listened to it, took it, and within 2 years, everybody had it on their own handheld calculators and devices, right, making decisions real time. And then I think in the 90s, it was the expert systems, right? These were the rules based environments where you're saying, if this happens, then do this. If that happens, then do this, and you create multiple layers of different rules, and depending on the sequences of the rules being activated, it does certain other things. So these expert systems came into play in the 90s, and then I guess in the year 2000, that's when data became like there was an overabundance of data,
Right.
but so much, and it was so cheap, right? It was cheap to get data, it was cheap to store information, and now it became an area where the quants found a different way of analyzing information and making predictions about certain direction of a specific company, before the earnings call actually came out. Before the financial statement or news or anything came out from the company, just looking at various different data sets, they were able to predict. And I'll give you a couple of examples of that as we go along on this podcast. I think then in around 2010 onwards, there was machine learning, which had the ability to kind of shift through or sift through massive amounts of data very, very quickly, and being able to compute different sort of rules and consequences and prices and
Yeah.
different scenarios in real time. So it was able to do not just making the same sort of giving the same output, but it was doing it so many times faster, basically. And then in 2020s, you got the Gen AI, where the machines don't just score information or predict; it reads, summarizes, it writes codes, it explains itself, and that's what's been happening going forward now.
I like how you put the term computer models, right? It's not something that I hear too often, but I feel that's a nice way of having that conversation because computers in itself, there's a whole element of saying what makes a constitutes a computer is a and calculator, a mini computer in some sort, or a very basic computer, if we think about it that way, and then we've evolved from there to highly sophisticated. And the other side, and I'm trying to bring that analogy because I think compute as a general conversation such a big part of the AI story, but and that hardware element of the you had your mainframes in the 50s and 60s and all. I mean, you still do, but in terms of these mainframes would take up so much space, literally large buildings full of mainframes to do complicated tasks. But now you have the same compute capability in a microchip. But even if you went 10 years ago, as they say, the evolution of the iPhone had enough compute, which is more than the compute for that was used to send man to the moon, right, in the 1960s.
Absolutely.
And that was a big mainframe building, and now you had this small thing in your palm with the same compute, and that's the scientific beauty that is now pushing us further and further in terms of stand at the end of it, right?
Absolutely. It's only going to get faster, and with the, I guess, introduction of quantum computers in time, I think maybe I'd say 10 years from now, that'll be the norm, and you'll have a small quantum computer in everyone's house, kind of thing.
But I do have a question, Jay. Thank you for actually revealing our age. Since you mentioned that AI has been in existence, when we say this, everybody kind of almost feels like it's 3 generations earlier, and people don't understand that we've been using AI for the longest period, at least in financial services. But I'd love for you to double take on the concept of data, because in our side of the world, especially in Asia, the data availability has absolutely massively grown, has massive potential also because of telcos and a mobile first generation which has never used anything else other than a mobile phone. But my question really is, with this vast availability of data on our sides of the world, and some kind of data privacy laws, when we talk about AI in its purest sense, do you feel that it's actually a boon for financial services because of the data being so massive and being available? And how do you see regulation, especially around data privacy and others, in these markets with regards to availability of data?
Yeah, that's the tricky one. I mean, if you're looking at first party data, there are very strict rules about how to use it and how to protect, how it's protected, especially user information and so forth. But in certain countries, that still gets used. And I think, different parts of Western parts, so some of the Western countries as well, they have one set of rules for government, another set of rules for commercial use and so forth. I mean, data privacy is a massive, complicated topic. I'm not an expert in that area, and I wouldn't want to try to step into that area and start talking about the different types of data privacy laws in different countries, and what you can and what you cannot do, and so on and so forth. But what I can talk about is that because of the use of this massive amounts of data, people are able to make very different decisions, different kinds of decisions. I mean, if we're going to keep it on the financial sort of sector, I think in the early days when Tesla was trying to get to the 5,000 car production, for example, and everybody was wondering whether they would, whether Elon Musk would actually hit it. And there was a lot of hedge funds that were betting against Tesla because Tesla had never made 5,000 cars a month. And they kept on saying they're going to do it, but they could barely make a fraction of that per month. So there was one particular hedge fund that decided to look at things slightly different. So they acquired device data, telemetric information on individual devices. So this was interesting because they didn't know what those people were looking at on their phones, but they knew the device ID was unique. So it could be an iPhone, could be an iPad, it could be something like that. And so they had that, and they had the geolocation. So what they did was they ring fenced the Tesla main factory, and they looked at the number of devices going into that location, and they put a timestamps on that. Then they found that there were 2 shifts that were running at that factory, and over a period of time, all of a sudden, you had a 30% more data or more devices in that same vicinity, in that same ring fence. So they studied that a little bit more, and then they found out that there were 3 shifts. So Elon Musk had actually put a third shift, so the factory was operating 24 hours a day. Then what they decided to do is ring fence Elon Musk's house, and they identified the devices that were available, and they monitored how many of those devices were at the factory. And of course, they would go back and forth, back and forth. But eventually, some of those devices stayed at the factory. So they made the prediction that, or they thought that Elon Musk is actually staying at the factory. And this was not market knowledge or anything at all. And later it did come out that Elon Musk, towards the final days of actually delivery, he was actually living at the factory. So this hedge fund, with that data, realized that Tesla is actually going to make the 5,000 mark, and they bet heavily in on with Tesla, and they made a fortune. So they didn't look at earnings calls. They didn't look at news from a company, anything at all. They looked at completely different sets of data to figure out whether they should bet on a particular company or not. Now, if you look at that from a data privacy perspective, are you violating data privacy because you're using individuals' location information and device ID? I don't know. It's anonymized in one way, but a device ID connects you to that device. I mean, it's so my phone has a specific device ID. Nobody else has that specific device ID. The only thing that's attaching myself to that device is my name. Now, if you take out the name, you still got the device, but you got the location. And if you know where I stay, if I get all these data sets, I can ring fence that specific geolocation. Now I look at the devices. Now I know that this is the device that's owned by Jay Shah. So there are ways to circumvent data privacy, because in one set it says if you have a full set of information that's compiled together that identifies a single individual, then you cannot use that, because that violates data privacy. However, I can stitch information from multiple different sources. So how does that violate data privacy? In some way it does, but so you got different rules being applied to different things.
It's the
That
extension
is
of the yeah.
such a
No, it's like
lovely story, right? This
yeah, it's the extent. The two other stories around data that we can maybe talk. Coming to Musk himself with his private jets, right? So there was a person who was tracking
Yes.
Musk's jet, and that was public information. Once you get to know the jet number, then that information can be tracked, and he had to really work hard to kind of mask where he was going. The second one that I want to touch upon is, and I think it's building on that conversation, is in the trading investment world, everyone's looking for that small edge, and different type of technology and data has been very influential, but it's about access at the end of it. On one side is the PII, the personally identifiable information. On the other side is actually um, significant business information. So I'll talk about two things. There was a show on traders about 20, 25 years ago, which would track a few traders who and how they traded in different funds. Wasn't it was like a real life show, and one of the episodes shows how somebody wanted to invest in there was an jeans brand that was going to IPO or otherwise. And
Mhm.
so the trader decided to go physically to the stores to see how much demand is there and how busy it is, right? And that kind of gave them an indication of, whether there is really actually that much traffic taking place. The other story is the use of satellites, right, to track parking lot data from malls and
Absolutely. I was going to come
yeah,
to that.
yeah,
Yes, they do that.
yeah.
So
Go ahead, share that. Yeah,
no, you're right. They buy basically information, satellite imagery about different shopping areas where these stores are located, and they look at footfall. So if they feel that the entire parking lot is full, then they know that that quarter is going to be a good quarter, and before the announcement comes out, they're able to bet in that direction. But they also know which particular stores that people are going to. So what they do is they buy anonymized receipt information.
yeah.
So you don't know the name of the person, but you know all the purchases that are being made. And when you compile all this data together and then you put that satellite imagery, you now know the people that come over to that location, they are going to these stores and they're buying these products. Immediately, you know what's going to happen to a particular brand's value
Yeah.
when they announce it.
which is data harvesting in some senses. And I want to build on that in terms of moving to the next part, which is you made a good, and Monica brought a very good point about um, personally identifiable data, right, in largely. But when you think about trading, it is interesting how, and it maybe explains why artificial intelligence, one of the early use cases was in trading and investment renaissance, and millennial capital in the late 80s is a classic example of the use case, is because you now had data that wasn't of individuals, but it was market data. And now you could synthesize that to take calls because it was essentially market intelligence. Going back to this conversation of how you could use satellites and other things, now you had a lot of data that you could put into these algorithms, right, to trade and find patterns from it, or be faster than the others in churning out that data to be able to act upon it. How have you seen that evolution, if you want to talk about, use of artificial intelligence, in particular different models that may have been deployed since the 80s to what we are looking at now?
Okay. Where can we start with this? This all started, I think, it was in 1956. There was a famous university in the U.S., Dartmouth, and that's where they coined the term artificial intelligence. It was the guy who started working on it. I think it was John McCarthy,
Yes.
and he wanted to come up with a particular name for it. And he thought, let me associate a specific name, and he associated artificial intelligence, and that has stuck since then for the last 70 plus years. But these guys actually, they thought in, being in a lab that they would work together with a group of engineers and crack AI. And they thought that they could do it in 2 months. But it's now 70 years down the line and we're still working on it. And there's a lot more innovation that's still coming and still to come and so forth. So it hasn't been completely cracked yet. We're going towards that sort of direction, but it's taken 70 years. And then you've looked at, let's look at the different types before we look at which, I guess, banks and organizations have been using AI. Let's take a look at the various different types. So you've got the basic prediction models, which look at historical data. And based on historical data, they'll make a prediction. It's like a weather forecast, right? They'll say in the next hour, there's 70% chance of rain. Well, because the data sets of air pressure, temperature, humidity, and all those kind of things historically was at this level. So within that pattern, we've seen that same thing happen, that there may be a 70% chance of rain. But there's always a 70% chance of rain everywhere. So, I mean, so that's why but nobody can really rely on weather patterns or weather predictions. The other part is the neural networks. The neural networks they're more mirrored in the way that the human brain works, and how there's association between rules and words and creates its own structure. Give an example to a child. So a very young baby, small little child, 1, 2 years old, they're still learning a few words, and then they're learning objects and what's a table, what's a chair, and so forth. When you're going out for a walk, you basically look at a dog and you look at many different small dogs. Some of them look like cats, but then you identify and say, oh, look, dog. Oh, look, dog, look, dog. And eventually, a dog appears that's much bigger than the child has ever seen, but the child already knows, oh, that's a dog, right? You don't have to kind of draw and say, oh, it has to have ears, it has to have paws, it needs to walk on all fours. You don't have to describe it that way. So that's what the neural networks ended up doing, is to try to learn and identifying its own associations between words and objects and rules and so forth. Then you had where you had the evolutionary models. So evolutionary models is, I would say, you've got a set of models that actually compute and make some predictions. Now, from those predictions, there's going to be a whole range of predictions that are crap. And there's going to be a certain ones that are very, very good. So you basically get rid of all the stuff that you believe is horrible and not needed. And then you take that small pool that you believe is good and has got some substance. You take some of that information in there, and then you re-go and do the simulation again and again and again. Over time, you're evolving your data sets and your models and your prediction to getting it a lot more accurate. And now we live in the world of Gen AI and LLMs. And the entire breakthrough of LLMs came in, I think it was 2017, when Google a couple of guys from DeepMind actually wrote a paper called "Attention is All You Need," and it was all about the design of the transformer model. And what it was all about before that was when computer models were looking at text. It was like looking at text through a keyhole. It would look at one word at a time. But by the time it's read the full sentence, it's forgot what the entire sentence was about because it wasn't able to associate one word to another and so forth. So the whole concept for attention is all you need is, give an example, is instead of showcasing one word at a time, lay out all that information right in front of the AI to see it and let the AI kind of skim through it and then figure out a specific word, let's say the word it, and then figure out, oh, what does it mean? So it is in the sentence. So what does it refer to? So it goes back and figures that part out. And it does it over and over again. Eventually it was able to figure out what really mattered. And then when you fed it more information, the content of the entire libraries, internet, and so forth, it was able to associate and learn things much, much faster. And then you had, organizations such as the famous one, Renaissance Technologies, right? They're the highest performing fund in the history of Wall Street. And Jim Simmons was a code breaker and a mathematician and so forth. And he started Renaissance Technologies. And they had a fund, they have a fund actually still, Medallion Fund, which is the highest returning fund in history. And they became so successful that they stopped looking for money from anywhere else. So they locked it. So only the employees of the company and maybe their family members and the earliest investors in the business get to use it, and that's it. But you've also got companies like Two Sigma, DE Shaw, where I believe Jeff Bezos used to work at DE Shaw before he went and started Amazon. So you got all these big companies that have access to this information, but what they're doing is they're looking at things very differently. Because if you look at the same things that everybody else is looking at and then make the same predictions that everybody else is, then you're betting in the same direction. Now you've got a massive flock of people making the same call at the same time. And when they want to get out, it's going to crash. And so to avoid those kind of things, these companies are looking for different sets of models, a different edge. To identify that signal from all that noise that's out there. So, yeah, it's an exciting space, and a lot of new things are coming in this whole area.
Yeah, I have a question.
Go on.
When we're speaking about the ability for these kind of models to be able to learn, etc. Sorry about this. How have we actually factored in their ability to actually learn locally? The reason I say this is because what I'm hearing is
Learn
learn
what?
local
Yeah.
nuances, because what we are seeing is like, even when we're talking, and I'm sure we're going to go into that segment in a bit, when we're talking about all the applications on financial services, what really happens is we tend to get biased when we're trying to build global products. We tend to only look at what might work in a few markets depending on where we are. Now we want these models to basically appeal to the largest possible audience in terms of consumers or businesses, or a likelihood of both. So how does that actually get factored in? And that's one of the questions that we often get. How do you use these models to make it more equitable instead of feeding it the information that we feel has to be fed? Like, how is that done?
Okay, this is an interesting one because this came. Okay, people think that if I teach a system how to learn and do things, that's that whatever humans are doing, that's the right way. That's what we should be doing. That's what we should be teaching the AI because we know better. Humans know better, and that's the way people have always done it. But then they realized, I think it was in not 2017. When was that? When did Google the Google Go?
Go.
Do you remember the Go?
2019, right? Yeah.
Correct.
Something
Yeah.
like that.
So that's the time when an interesting thing happened, where instead of so they tried to build a Go engine to try to predict movements and so forth. But what they did was, they right in the beginning stages, they kept on failing because they fed it all the information about how to play the game. So they taught every move that every other grandmaster had ever played, or any Go player had ever played. So they fed it these rules. So the computer system or the engine or AI just learned those things. And when it came to play a grandmaster who tried a different move that had not been done and not been documented, it failed. So the AI failed every single time. So these guys decided to try to do things differently because they said, um, let's take a step back and let's take a look at maybe humans do not possess all the probabilities and knowledge that ever can exist. There are many more things that can be done that we still haven't figured out. So they basically let the AI, they gave it the rules. So they structured the rules of how the game is sort of the rules of the game and how do you actually win. But they did not teach the AI of how to play the game. They let the AI figure that part out on its own. So after running tens of thousands, hundreds of thousands of different simulations, it learned a very unique way of playing the game. And I think when they played the game, one of the grandmasters, I think it was a move number 37 or something, he stepped back. Um, he was completely taken back because the AI had made a specific move that looked really really ridiculous, and the guy had to get out of the room to kind of compose himself and come back to the table and try to play again because he thought that was the dumbest move ever. But later on, that move was the one that actually beat. The AI ended up winning the entire game. So it took the person through a completely different sequence of events that had never been thought about in thousands of years or whatever. And the AI learned a completely new way of beating a grandmaster. And now constantly, any grandmaster that plays the game will still be beaten by the AI. So I think it's not about us trying to teach the AI to figure out the best way to do certain things. It's about letting the AI and giving it the guardrails or the rules or the structure and saying, you figure it out. It's building a more stronger and a better optimization engine that actually learns how to figure that stuff out and how to search through a massive universe of potential configurations and probabilities that it can actually figure out from there what's the best move.
It's very well articulated in terms of that distinction, I would say, and I was going to bring that in terms of how we see algorithms and probabilistic or predictive AI, right? And that's probably been one of the major changes because your initial days of trading and investment, and still happens, is algo based, which is looking at numbers and looking at patterns that can be repeated. Whereas with probabilistic, it's imagining a newer path to a certain extent, right? It's saying, okay, possibly it's not there. Maybe this is what it can be. It's trying out as a lot of traders do, right? Okay, let's see what happens. You could rely on previous performance, and as they say, previous performance is not a reflection of future expectation. But you could say, okay, maybe let's try something else. Let's go down the uncharted path, as it were, right? And I think that's one key element that probably has changed over the last 10 years or so, versus because of the data availability, but the training, how you're training the model, right? Almost not asking it to be, maybe I'm using a very crude example. It we're all Indian origin or born and raised in India to a large extent, where you went through the rote model and you read what you read and you went in delivered and needed to be exactly as per the textbook. And you would hear a lot of the models in the Western education, which was think and build your own way of doing uh, and exploring and learning. And I feel that's probably where we may have reached now, or we have been in the last 5 to 7 years.
But that instills a lot of bias.
Yeah.
Just exactly what you put. You're right. It's the way that humans have learned where your culture is, which schools you went to, what your teacher taught you, and so forth, and the experiences that a particular person's had. They have a set rules and a expectation of how things should be, and what they consider is normal. What their values are very different. So values completely separates human beings from one another. And so when you're coding an environment or any AI or base model, and you start instilling your thoughts or what you believe it should be doing, now you're introducing bias into a model. And imagine that bias then evolves as time progresses. Now, apart from just the financial services market, this bias has become a major issue. In the US, they have a system called Compass. Compass is actually used to identify or being able to predict whether a specific um, criminal or someone who's convicted, not necessarily not convicted yet, they're still in court and whatever, but whether a specific person is going to commit a crime again. And this model was trained on very biased information on African American and Hispanic data. And actually, publicists wrote a paper on this and said that that Compass model is biased, but still in 12 states in the United States, they still use it. So, when you instill bias in engines, you can't really rely on those engines for a long period of time, and they will give you false predictions time and time again. That's one thing that I can tell you that will keep happening if you start instilling bias. I'm also one of the co-authors of a amazing project by Singapore government back in 2020 to write the body of knowledge for artificial intelligence ethics and governance. One of the chapters that I worked on is on bias and how to completely get rid of bias from your systems when you're actually building it from ground up. And that's extremely important because that'll completely break any model. So when you try to build algo trading, which is I'm sitting with a whole bunch of traders, identifying that the way that they trade, learning which instruments that they use or which financial analytics they use or what methods they use, and then coding that up. But that is very biased to the way that the trader is actually learned. And in one trader will have 20 years of experience, another one would have 10 years of experience, and a new one could have 5. I'm bundling all this thing together and expecting that I'm still going to get the same type of outcome. It won't. So there are tens of thousands of algo trading systems. Only a few of them really make it work. The rest don't.
And that's where
That's
also
algo trading.
correct.
That's algo trading. Then you got the AI trading, which is looking for another edge. Now, if you design your AI system and you try to get the bias out, it will find that edge.
I'll close on this point, and I feel that's what I wanted to hit on is when you mentioned about everybody following and they market crashes. When I was trading 10, 12 years ago, often when we would see is I was a point and click electronic trader, but there were a lot of algos that were coming in. But after a while, they're all looking at the same patterns and same data, and so their responses when there's a macro event or there's a data or there's a any other incident that's impacting the trade or the market, they would all go away, right? Either they would pull out their buy orders, or they're all trying to sell, or they're looking to buy. But you'd see identical movements, and that's what would lead to a lot of flash crashes. Whereas I feel
Yes.
with the AI models, you won't necessarily see it because each model is kind of thinking on its own, rather than there being this collective intelligence that they're all using, right? Which is the same thing, which can then lead to a higher probability of the response being similar, is probably where I'm coming from.
Yes, your statement is correct to an extent that because AI, the word AI is now so loosely used. Anyone that's got anything better than a little PowerPoint presentation claims that they're using AI, or they've just touched on using ChatGPT once to write a code. I'm using AI in my system. So it's so loosely used. You've got to figure out who's actually really using AI. And then if you understand the way that they're building their models, how they actually make predictions, and whether there is an edge to what they're doing. Because people claiming a lot of algo systems are also AI because they're bundling multiple different algorithmic trading predictions and saying if X number of predictions are being made in the same direction, then I believe I should be placing the trades in that same direction. But that's exactly what you said. What you want to avoid, everybody pushing the trade in that same area. Even the guys who actually created the black skulls model, the three guys, the physicist, the economist, and the coder, I think one of them couldn't get the Nobel Prize because he died 2 years before getting it. The other guys got it. Then they ended up joining a trading company. And after that, they ended up using their own models to make predictions and start trading. They nearly crashed the entire market. SEC had to get involved in, I think, late 70s to stop that from happening. So it's one of these, what do they call it? There's a word for it. It'll come back to me.
Okay.
Yeah. So, yeah, go ahead. So I didn't want to stop you there, but
No, go on. Yeah.
No, that's all I had to say on that part. But then, there's a lot more in different areas that we can talk about, depending which direction you guys want to go. We can talk about nature.
Yeah,
That's how
we
you're going to
can.
get edge. So
Sure.
Renaissance Technologies uses this actually from the bits and pieces that are put together out there, that they draw inspiration from nature. And a lot of people have started looking at this, not just for trading, for many different aspects, right? Nature holds the biggest breakthroughs, as it holds, it's probably the best optimization engine that ever exists. I mean, the Fibonacci sequence existed from the beginning of time. It wasn't
Yes.
invented. It wasn't like, oh yeah, I came up with it. It's been there since the Big Bang Theory. So I'll give you examples of nature.
Not the show for the younger millennials and Gen Z, but yeah.
Oh yes, absolutely. So I'll give you different examples of nature being used in society today, right? In Japan, when they created the bullet train, and the bullet train was coming out of the tunnel so fast that the amount of noise that was produced after that was too loud for the residents around. So they needed to figure something out in a different way. So this engineer, who used to be a bird watcher, he loved watching birds and so forth, and he watched this kingfisher bird. When the kingfisher is flying and going, dipping into water, there's hardly a splash and there's hardly any noise. So he designed the front of the bullet train to look like a kingfisher's beak. And by doing this, it actually ran a lot quieter. It was able to run faster with 15% less electricity usage. And that's, drawing inspiration from nature. There's another one, I think it's also in Japan, um, something that took decades with teams of engineers and communities or committee decisions and so on and so forth, decades and decades and millions, tens of millions of dollars being spent to create the Tokyo rail system, to make it very efficient in terms of getting from one place to the other. And this this researchers in Japan basically decided to do something very, very basic. They got this single-celled blob, a slime mold, basically. And all they did was they took a dish and they placed I think it was oats, in various different sections that simulate the main areas in Japan. And they left this mold overnight to see what happens. And the mold discovered the most efficient ways to interconnect these oat sections. And when you looked at the map in the morning, well, this is within 24 hours. When you looked at this what it had created, it looked like the Tokyo map, the Tokyo rail system. So you got a mold that was able to do it within 24 hours, which took engineers, committees, consultants, over many decades to put together, which this single set blob with no brain was able to do it within 24 hours. So there's a lot of things that nature has which can be used in today's world. In our system, we actually use we draw a lot of inspiration from nature to actually build our models. And it identifies certain signals that are not seen in the way when you're looking at the normal financial markets, or when you're looking at the various different financial analytics. We're able to identify changes in the market before it actually happens, get in much earlier, get out much earlier, and so on and so forth. But everything was drawn from all the entire models were inspired by looking at nature.
But I have a question for you here.
Sure.
When you think about your models, and thanks for bringing this up, for the nuanced listener who's thinking about what kind of use does AI have in the kind of trading models and etc., or what Pyron does, how would you explain that, and how would you bring in, because this is such a fascinating aspect that you can look at nature and bring in those aspects in terms of learning, that therefore can be incorporated in the models. But is there an instance of something like that having been done that will leave our audience wowed?
Well, has it been done by anybody else? There are a few people or a few major organizations that probably do it. Names I can think of is probably Renaissance Technologies, Two Sigma, Jay Shah, maybe Blackstone, Citadel. So there are a bunch of massive institutions that have done it, and there are probably a smaller ones that do use a different way of using AI or drawing inspiration from nature to build their models. and those probably want to be kept quiet because they're so successful they don't need to kind of draw in any more attention. Um, so for our systems, it wasn't about trying to identify one specific aspect of nature or one specific model or even 10 models that are the winning models that make a decision. Nature doesn't work that way. Nature works in mysterious ways. You get hundreds, thousands of organisms that work together to form an ecosystem, and that ecosystem evolves, it mutates, and so on and so forth. So we've got now about 170 models in our engine, and we keep building new ones, on a constant basis. It's not about trying to find which model is going to do or work the best, because it's not for us to decide.
Mm-hmm.
We've built an engine that actually makes that decision based on how the models are actually predicting and what it's looking at the market, and how it actually pays attention to certain things in the market for a specific financial instrument that we want to trade. So what does it actually pay attention to? And then it figures out the right combination of models that it needs to use in order to make that prediction on a regular basis across multiple different regime structures, and whether the system is able to adapt. So if the market changes, which it constantly does your model configuration adapt to new market regimes? So that's what we have actually built. And we took a lot of inspiration from nature. One, I'll give an example. Sound frequencies is an interesting one. And I won't go into the details of what we've built, but give you an example of this specific. In sound, in the animal kingdom, or even in humans, you could have a room full of mothers with their babies sitting next door, like literally in the living room, and let's say the mothers are on the dining table, chit chatting and so forth, and the babies are in the living room. But when one specific baby cries, a lot of mothers will continue talking and chit chatting, but one specific mother will get up because they know that that's their baby. But to an outsider listening in, it's just another baby that's crying. It's just noise. But to a mother, the mother knows, nope, that's my kid. That unique frequency signature that a mother can associate with their child is truly unique. It's magical, right? But it doesn't just happen in humans. It happens in the penguin world. It happens in anything in nature.
That's
Penguins with the
happy feet story, essentially.
Happy feet story, absolutely, right? So the mother penguin goes out, comes back, and you got millions of penguins now. Everyone's chirping. How does it identify its husband or its partner? By the very unique sound signature being emitted by the penguin. It's like a unique fingerprint that everybody. It's a unique signature, right? Or your DNA and so forth. So we look for these unique sound signatures hidden in the financial market. That's just one example. We've got a whole range of other models that look at flying insects, creepy insects, and so forth. How they sort of identify prey, identify predator, how they go and catch prey, and so on and so forth. And based on all of these, we've created math models, and we've used the financial data, literally minute data of open price, close price, high, low, spread, and so forth. And we mirrored this data across to our math models to figure out the best way to actually trade any specific financial asset and what actually correlates to another. So, yeah.
It's always that fascination with and I learned about the Fibonacci series when I was doing my engineering, and I was, you learn it, and then we had some professors come in and talk about snowflakes and the replication of the Fibonacci series in the snowflakes, and how each snowflake is unique.
Yes,
and
absolutely.
Patterns come in, and mathematics, and that's the key thing here I was going to say is, when we're thinking of various elements around trade data, around intelligence, it is a lot about learning from outside in nature, as you said, and some of it is inherent, that gut feel conversation to a certain extent, but some of it is actually very scientific. Gut feel is also meant to be essentially the data that's been recorded at the back of your mind, which you cannot rationalize or articulate. Let me rephrase that, not natural. You can't articulate, but then that's that gut feel, right? For athletes, as they say, the muscle memory that kicks in, where they're not able, they do something without intentionally looking to do it because their body is just being trained to respond in
Yes.
many ways. And then the replication of neural networks, basically replicating how the brain works. What I want to
Yep.
build on top of that is, and thank you for sharing that nature model, is how we now see the evolution of the next stage for trading in general. And I'm saying trading or investing, right? This is less about a conversation on what returns, but the techniques and the methodology and the conversation around compute. Going back to that piece, right? And it's fascinating when we talk about DeepSeek, which not too many people will know. DeepSeek was developed by
Quant trader.
quant traders, right? Who had extra compute and had very smart people and said, "Oh, why can't we do this and try doing this?" And managed to be such a major inflection point that they turned possibly be one of the major factors for the Hong Kong Stock Exchange to bounce back from its multi-year low, and it's just been on that super bull trend since, and also for Chinese AI, broadly speaking. So what I'm trying to come to is, day before, Jensen Huang announced at NVIDIA about this super powerful chip that has 128 GB memory, and it can run agents natively on your laptop. Now, if you use the same thing, forgetting the application of using agents, but we talk about the application of the compute, right? Can now individuals sitting in their home trading their online, connecting to a Zerodha or a Revolut or whoever it is that they want to connect into, be able to uh, deploy agents and artificial intelligence. Do you think that is a viable, that's a realistic future, say 5 years down the line, or do you feel it's still going to be about how you're able to train it, instruct it, a bit like saying you have Gen AI, but if you don't have the right prompt, you could be spending a lot of tokens just getting
That's
down.
true.
Yeah.
Would people be able to use it on their computers and do it themselves? Yes. The answer is yes there. Would everybody be very successful? The answer is no. So it's not about I have a powerful compute ability that I'm going to be able to use Gen AI to be able to build my models and make a $1 billion tomorrow. It doesn't work that way. So you've heard about psychophancy as a big topic that keeps coming up while LLMs hallucinate and so on and so forth. So LLMs, all these systems are designed to give you responses that make you happy, or you'll agree with, and that gets rewarded accordingly and so forth. And that creates, because it doesn't know the difference between what's reality and what's not. So what's fact checked and things like that. That's why it's able to give you a story that sounds very real when written, and yet it's not. And this has happened multiple times where I think a lawyer got caught off guard because he asked an LLM to come up with use cases or something or the other, and the LLM did come up with use cases with case numbers and files and everything. And he started reciting this in court, and basically he was struck down. He says, "Hold on a second, these are all fictitious use cases. They didn't ever exist." So, look, in our system, we have tried to use LLMs to build parts of the engine, but it failed because the combination of certain policies, certain technology sets or libraries that we use, if you were to talk to a data scientist or any mathematician or working in a corporate environment, they'll say, "Oh, those things will never work together. They'll fail. They'll never work. They'll just will completely fail. They're not even worth spending your time or money or anything doing it." So when you try to build, and remember, LLMs are being trained on data that already exists. It's not making stuff up. So it's learned from all the sort of publications, books on coding, things like Stack Overflow, and so on and so forth. So it kind of knows how Python language works, C++, and all of these kind of work. But when you try to get it to do something that nobody's ever done before, and that's when it starts providing you answers and leads you back to the traditional way of using those models, because that's what the models have been written on. That's what the the publications, or whoever's designed any of these models or policies, whatever. What are the limitations of those models? What you can do? What you can attach it to? How you can work together? They've already written all of that, so that's already there. So when you ask it to do something completely different, it fires back and says, no, that's not possible. But let me try this other approach because this works. And most users will look at that and say, okay, fine, let's go with that, because maybe what you wanted to do wouldn't work, and AI is better at learning and understanding all these things. So you just believe it, and you go down the same route that everybody else is, and building the same models that everybody else has. So in our system, the entire engine, everything is built by the team. Nothing has been built by agentic AI. For that main reason, we couldn't get it to agentic AI to actually build efficiently for what we needed. So, I mean, could everybody build systems? Yes, but it's about making sure that you understand the limitations of these platforms that you're asking, to build your engine or to build your trading platform, whatever. Understand what the limitations are before just completely diving in and believing that, in an afternoon, I'm going to be able to create an algorithm that's going to make me hundreds of millions of dollars in a month, because that's not going to happen. You hear it on TikTok and Instagram stories, but there's also fake news.
The finfluencers who are now needing licenses in many countries now, right? And it's very poignant that you speak about agents and how, a lot of the last few years you've had these conversations around copy trading, mirror trading, all of these.
Yep.
And one of the things we used to often talk about as traders, and if say, oh, somebody else will copy your trade, we'd be like, yeah, it's fine. If people getting in, sometimes it's oversimplified when it comes to trading and investment, where people feel it's a buy and sell decision, buy at X price, sell at X plus whatever price, right? Or sell at Y and buy down at Y minus price. It's not that simple, because markets are very dynamic and they keep changing. And those of us who have sat there day in, day out for many years know that reality, and even from an outside perspective. And that's where it is going to be that reality that you could use this mirror trading, etc. But you may know when to enter, and it's a bit like getting into a national park. The people can tell you that's how you enter and that's the exit, but you don't know the pathways, you don't know how the hills are, where the trails go, where are the snakes, where are the snails, where are the bears hiding, and others. In the trading world, it's the same thing. You will come in, the circumstances were certain, it was very sunny, and suddenly it's going to rain, and there's cloud. What do you do now? You don't know. You think, and the other person knows what to do because they've been there multiple times, whereas for you it's new. And hence I think this is going to be very interesting, from people thinking it's easy and they get their hands burned, but maybe there is going to be that mid path which I'm seeing now, which is in Hong Kong. We've started seeing some of the major online brokers or online trading platforms offering agentic AI assistance, saying, hey, you want to do a trade? Use our AI agent. It can then give you the information. You can search here, talk to the agent, and then deploy, right? And I guess that is going to be interesting. In a way, this is a bit like a robo advisor, but democratizing that whole process as a
that is amazing.
Investment advisor, right? Yeah.
Absolutely. I think that's a great example, because using AI to analyze thousands of documents and information and being able to provide that data back to you for you to then make a decision or make a call, that's definitely is the way to kind of go for most people, for most traders. But I give an example. You could have a model that always, if you're looking at whenever it trades a buy position, okay, let's say you're trading FX or commodities, whatever, and it enters a buy position. But every time it enters a buy position, it loses money. Every single time it enters a buy position, it loses money. You might think that, what if I reverse that? What if I take the same model, but every time it predicts to make a buy, I put the opposite, I put a sell? And logically, you'd think, hold on, because logically it makes sense, right? If it's going in one direction, if it's always losing money, the only other way you can do is go sell, and reverse it, and you'll make money. It doesn't work. It doesn't work, and we prove that. We've seen it We actually created a model like that because people thought, hold on, if your model doesn't make a decision in a particular direction, what if you reverse it? I said, that doesn't work. So we actually built the simulation to show that it doesn't work. Um, so entering a trade is very easy. That's the easy part. Being able to predict, um, which way the market's going to go. That's the easy part, I would say. The biggest and most challenging part is the risk management. How long to stay in for, how much to go in for, and when to get out.
Yeah.
And so forth, right? This leads to a guy called what is it? I think maybe Claude's named that Claude Shannon. So Claude Shannon was a mathematician. He created this thing called information theory. He invented the whole thing about information theory, but how to make sure that you get the right signal through all the noise. And this is why Wi-Fi is a lot better. You and I talking right now, it's not jittery and so forth. Voice quality is really good. It's because of this guy called Claude Shannon. And then there's another guy within the university, John Kelly. John Kelly decided, hey, if there's a way to now use information theory to be able to get a good signal through noise, how can I use this to, for example, for a gambler, right? How do they know that from all the stuff that is being played out on the table, how much should I actually put in? How much should I actually bet? From all of this noise that's out there, I want to know how much should I go in. If I've got the edge, if I know what's coming, how much money should I put down, right? And he created this thing called the Kelly criterion. So if you go too little, for example, then you're leaving too much money on the table. If you go in too much, then if you get a bad move or a bad hand, you've lost all your money. You're broke. So how do you know how much to go in or go out? And Kelly Criterion created this thing, and people are using it today to figure out that I have a prediction. It's in a certain direction. I'm going to go in. I have a certain amount of capital, and I have a certain risk tolerance. How much do I use of that capital to be able to go in? And how long do I stay in for, and when do I get out, and so forth. So you've got to, if you're going to go and start trading, you've got to start learning all of these other things that are happening to be able to figure out how to manage your risk.
It's the 10,000 hours, right? Let's see if people have that.
Exactly,
The tipping point is not going to be using an agent. It's going to be still your 10,000 hours.
Yeah, absolutely.
Using the agent as well, probably.
Yeah.
So,
but if you didn't want to do all this stuff, then you go and go down the Charlie Munger's approach.
yeah.
And he's basically saying, we didn't look at what's fancy. We didn't go and start trading because everybody starts talking about it and because it's fancy and it's really cool. We didn't go for cool. We went for what is stable. So they bet on Coca-Cola, they bet on brands that they knew consumers were constantly using, and they did that, and they did phenomenally well.
And for years and decades, and it's the whole build up. Right? Yeah. Jay, this has been a fascinating conversation. I, for one, could definitely continue this for hours, but I think we've touched on a lot of very good points, and I wanted to, have you on, and in terms of bringing that nuances to how AI has evolved, but also how it's not as a very simple black box in, black box out kind of conversation. There's a lot more to it, and I feel
there's a lot more.
And we will see quite a bit of different models in the coming years, which will run in parallel, agentic to predictive to neural to biointelligence, as it were, and nature is forever giving. So thank you so much for taking out time and educating and decoding use of AI in investment for our audience. It's been a pleasure having you.
This has been fun. Thank you, guys. Thank you.
Okay.
Thank you so much.
Thank you.
Great. Thanks, audience. And keep watching for more such decoding of fintech, artificial intelligence, and digital assets topics. This conversation was very much about use of AI. This is not investment advice. Please do your research if you are looking to get into using AI or other elements for your investment, and go speak to a licensed broker dealer or investment manager wherever in the world you are when you're listening to this. So yeah, follow us, click like, click subscribe, and stay tuned. If you have questions, you have comments, please do so and add it in the YouTube.